Hey everyone, Steve here from 11ish, and thanks for joining me today. In light of the current situation throughout the country, the civil unrest is justified and ubiquitous. It's the result of pent-up anger and inequality that has finally reached the critical mass. I sympathize with the frustration and the expensive outcome. We've tried peaceful for years, and that did not work. This is the end result. The silver lining here is that change is inevitable, and now there is an investment opportunity. That is to say, we have the opportunity to invest in companies that matter, that can drive change. In this episode, we're going to talk about body cams, the companies that are worth looking into, some of the risks involved, and how it can work for your portfolio. If this is the type of content you've been looking for, please hit the like button and let's get started. One of the benefits of investing in this opportunity right now is that a huge component of the current movement is about better police accountability. And therefore, if you invest in body cams, you're driving change towards the right direction. The other pro is the fact that most of these companies, they don't just build body cams. Because if you think about it, it's basically a glorified GoPro with a commercial software. Analysts estimate that there's a $1.5 billion market by 2025. I think the market is a lot bigger than that, especially in light of the fact that a lot of police departments, hopefully most of the police departments will end up buying one. So not only do I think the market cap is a lot larger, I also think that the deals will be made a lot sooner because of the current events. Because body cams are not new technology, it's been around for a long time and in the news for mostly the last half decade. There's tons of ways for you to invest, right? You can invest in companies that are using body cams as part of their portfolio, like Motorola and Panasonic. You can look for pure plays like Axon and DGLY, and even GoPro is part of this space. Furthermore, you can actually invest in the components as well, right? But I think that's a little bit more challenging, needs a lot more research. The con is that selling to government agencies, as you might imagine, is not easy. Everyone has their own timeline, and budget is never there. And so now is probably one of the best times for these companies to close those deals, but still, they're working with tight budgets and different timelines. So I'd assume that the sales are pretty seasonal, depending on how the government budgets are created and allocated. This is also problematic in the sense that if you're a startup like DGLY, I can imagine it would be pretty hard for you to close deals, because ultimately, product differentiation doesn't really matter in this space. DGLY spent a lot of time and effort trying to win a patent infringement lawsuit, and that lawsuit got dismissed a month ago. And so everyone is offering very, very similar technology. That to me means that whoever has the best sales team wins. And right now, Axon has the most headcount, has the best looking financials, and therefore, in my opinion, has the best chance of winning. I know a lot of you are going to tell me DGLY just closed a $3 million deal. Yes, that's true, but they're only making around $11 million top line in the first place. $3 million does not justify a 6x stock price. You also see that they just put out a newsletter saying they're going to dilute that stock. It basically means that they need working capital. It's great for the business. It makes perfect sense to me, but that's going to tank the stock price. They don't have enough volume to keep that price up. So if I were to pick a stock, I would definitely go with Axon. They have been beating their earnings year over year. Unlike DGLY, who's been missing their earning year over year, they're cash flow positive, unlike Axon. And analysts agree almost across the board that there's about a 15% growth potential. The one turnoff about Axon, depending on how you look at it, is that Axon also make tasers. So if you don't want to be involved in the company that does that, then perhaps DGLY is a more interesting bet. But I think a better opportunity is GoPro. GoPro has brand awareness, brand love, and they're actually working with a company called Intrinsic to go into this particular market segment. The balance sheet looks a lot better than before, and I think it's way smarter for them to tackle another niche market that needs a hardcore extreme camera as opposed to fighting Google and Apple on the mass market. I don't think that's been a winning strategy at all. So the key to emphasize here is that this is a really, really great investment opportunity and a great industry to be a part of. But you should not look for home runs here. There is speculation that is pump and dump. which I highly recommend you avoid because that's not a sustainable investment strategy. But if you invest in a company like Axon, where the entire public consensus is basically saying more accountability, which means more body cams, then you're almost guaranteed to make money. That is a much smarter investment strategy than trying to 3x your stock off of a penny stock that is being diluted and has only landed a $3 million deal, but the company is still negative, etc., etc. I hope this gives you a little bit more insight on the body cam industry. The opportunity is there, and I hope this helps you figure out which company to look at, how to look at it. If you have any questions or concerns, please leave a comment so we can start a dialogue. Thanks for watching, and I look forward to working with you next time. Thank you.